Today, we're going to pull back the curtain on some of the key forces that are really driving our markets. Everything from these massive tech rivalries all the way down to the nuts and bolts of digital assets.
All right, before we jump in, just a quick heads up. This is purely for educational purposes. It is definitely not financial advice.
So you ever look at the market and wonder what's really going on behind the scenes? You know, beyond the daily headlines? Well, that's exactly what we're getting into today.
We're going to break it all down into 4 key areas. First, we'll look at the high-stakes hardware race in AI. Then, we'll dive into the psychology that makes markets swing. After that, we'll explore the new frontier of digital assets. And finally, we'll pop the hood on Bitcoin to see how it's actually made.
Okay, first up, the world of artificial intelligence. There's this incredible rivalry happening right now where even the biggest tech companies on the planet are basically customers of each other. And right at the heart of it all is a massive multi-billion-dollar decision by Meta, the company behind Facebook and Instagram. They have to figure out where to get the powerful computer chips they need for their huge AI ambitions.
And their choice really comes down to 2 options. On one side, you have Nvidia's GPUs. Think of these as the super powerful, do-everything engines of the AI world. But they have a hefty price tag. We're talking $25,000 for a single unit. On the other side, you've got Google's custom-built TPUs, which are hyper-specialized for AI. And here's the kicker. Instead of buying them, you can rent them from the cloud for as little as 84 cents an hour. For a company like Meta, the potential cost savings there are just staggering.
Of course, Nvidia isn't just sitting back and watching this happen. They came out with this really bold statement, basically saying, hey, we're a generation ahead of everybody else. Their argument is that their chips are way more versatile and can run any AI model you throw at them. It's that classic case of you get what you pay for.
So, these huge corporate showdowns are one piece of the puzzle. But what's driving the market day in and day out is often something much simpler, much more human. It's really all about psychology. See, when you boil it all down, the market is just this constant tug of war. On one side, you've got the buyers, or bulls, who are buying things up and pushing prices higher. On the other side are the sellers, the bears, who are selling and pushing prices down. And honestly, just understanding who's winning that tug of war at any given moment can tell you a lot about why the market is moving the way it is.
You can even think of a trading day like a football game. The first quarter starts, the opening bell rings, and boom, the sellers might come out strong, pushing everything down. But then, in the second quarter, the buyers often see an opportunity and stage a comeback. The third quarter can be kind of like halftime, where things just move sideways as everyone tries to figure out the next move. And then, in the fourth quarter, one side usually makes a final, decisive push right into the closing bell.
All right, so we've covered corporate strategy and market psychology. Let's shift gears and talk about a newer frontier, where both of those forces are on full display: digital assets. The ways you can invest in things like crypto are changing, and it's creating some really interesting new bridges to traditional finance.
Here's a really crucial point. There's a big difference between owning a cryptocurrency directly in a digital wallet versus owning it through something called an ETF. See, if you just hold the crypto yourself, traditional banks typically won't let you use it as collateral for a loan. But if you own shares in a crypto ETF that's traded on a stock exchange, suddenly you can borrow against it. This is a huge, huge deal for bringing crypto into the mainstream financial system.
So what exactly is an ETF? Well, the easiest way to think about it is like a basket of assets. Instead of you having to go out and buy each individual digital currency, you can just buy shares of this one basket on a regular stock exchange. It basically makes investing in crypto just as easy as buying a share of any other company.
For our last section, let's really get into the nitty-gritty. How is an asset like Bitcoin actually created? How is the whole network maintained? Well, the answer is a process called mining, and it all comes down to energy and economics. At its core, Bitcoin mining is all about one simple calculation. A miner has to constantly ask, is the value of the Bitcoin I'm earning greater than what I'm paying for the electricity to create it? It's a constant balancing act. In fact, there's a formula for it that miners pretty much live by. It's sometimes called the bridge equation. It helps them figure out their daily operating cost based on 2 things: the price of their electricity and the efficiency of their mining computers. They compare that cost to what's called the hash price, which is basically the reward the network pays them. If that reward is higher than their cost, they're in the money.
And when a mining company gets that equation right and really scales up its operations, Well, the results can be pretty dramatic. Just as an example, one publicly traded miner, Hive Digital, managed to quadruple its annual revenue in a single year, going from 100 million to 400 million.
So what's the big picture here? We've seen that today's markets are being shaped by this fascinating mix of things: fierce technological competition, basic human psychology, clever financial inventions, and the fundamental economics of brand new asset classes. And that kind of leaves us with one big question to think about. As technology and finance keep smashing into each other, which one of these forces, the raw power of new tech, the psychology of the crowd, or financial engineering, is ultimately going to write the next chapter for our economy?
Thanks for watching this economic update on 15-Minute Investor.